On behalf of the Sustainability Reporting Standard Board of ICAI, Jyoti Singh extends a warm welcome to all of you to the 38th session of our webinar series, Demystifying Sustainability, Catalyzing Growth. Today's session is centered around a critical theme, materiality assessment. We are honored to have with us our esteemed speaker, Meghal Shahji, our moderator for today, CA Dimple Kunal Gogri ji, CA Manisha Keshav ji, Dedia ji. Let us now begin. I would like to invite CA Manisha Keshav ji, the Dedia ji, to kindly take the session forward.
Good afternoon, everyone. I see Manisha Keshaji Dedia warmly welcomes all the dignitaries and participants to the today's session on materiality assessment organized by the Sustainability Reporting Standard Board. It's my privilege to introduce today's speaker, Ms. Meghal Shah. Ms. Meghal Shah is the head ESG and company secretary at IAFL Capital Services Limited, bringing over 13 years of experience in corporate governance, compliance, and sustainability leadership. She has played a key role in integrating ESG principles across the organization, leading IAFL Capital Services upgrade from adequate to strong increases ESG rating. She steered the organization towards ISO 14001 certification, certified in ESG investigation by the CFA Institute and trained in business responsibility and sustainability reporting by the Indian Institute of Corporate Affairs. CA Meghal Shah combines the deep regulatory expertise with forward-looking approach to a sustainability business. His work focuses on enhancing environmental performance, advancing social impact, and embedding best-in-class governance practices. With this brief introduction, I welcome Ms. Meghal Shah to hand over the session and deliver the session. So now, madam, over to you.
Thanks for the kind introduction, Manisha. Good afternoon, everyone. So I'm happy to join you all today in this discussion on the evolving landscape of ESG, especially on the topic of materiality assessment, which is a cornerstone of the sustainability governance. I'll just share my screen with all of you. So I know ESG is a buzzword in today's time amongst all the corporates, but it is not a trend. It is a transformation which has come in place, and the companies are working towards it. There may be multiple reasons for it. It may be because of regulatory requirement, or it may be because of peer pressure, or maybe the companies are doing in letter and spirit the ESG initiatives. Whatever the reason may be, but yeah, ESG is something which is growing. And with this demand of ESG disclosures and requirements, one important concept is materiality assessment, which I would be touching upon in today's discussion. I'll just run through you what you can expect in today's webinar. So we'll be talking about the ESG overview. I hope my screen is visible.
Yes, ma'am.
So we'll be talking on the ESG overview, why materiality matters to the company. There are different types of materiality. There's a process of assessment of materiality. We'll discuss on that as well. And most important thing is stakeholder engagement. We'll be touching that point as well. Some frameworks and standards of reporting of ESG, some real case studies of various companies, what they are doing, and the trends and challenges which people face in doing this assessment and reporting as well. And of course, at the end, we'll take up all the questions. We'll be happy to answer that as well. So with this, I should start with the actual discussion. To just set the context, what is ESG? I know people know that it's environment, social, and governance. So under these three pillars of ESG, many issues comes into picture. Under environment can be climate change, GHG emissions, energy management, waste management, pollution. These are various topics which comes under environmental factors. The social factor basically comprises of three things. One is, of course, the employees of the company who are integral part for a company, and their human rights, the labor practices, their health and safety is important thing for them. Equal opportunity should be there. Also, social involves the community impact which the companies have because of their businesses and operations, and the most important thing is the consumers. So how the companies create awareness or how they impact the consumers through their businesses. All these three things together build up the social pillar. One of the important pillars is again the governance side, which if collapses, it has been seen many instances where because of governance collapse, there has been companies which has defaulted and which has come down. So governance includes business ethics, transparent reporting, risk management, of course, and the board structure. So we'll be touching about all these issues and how we integrate these issues in the company and how these things are actually acted upon. We'll discuss in the later part of the presentation. Why ESG matters, first of all. I have told that, yeah, companies are doing because of peer pressure or regulatory issues or letter spirit. But how does it matters to a company? So now the ESG compliant companies have better access to capital at a lower cost. How? Because banks or the institutional investors, they are looking for ESG compliant companies. I can give a real life example in my company as well. Every year we get a big questionnaire from our institutional investors to fill up our ESG practices and initiatives. It's a huge questionnaire and they give us around 3 months to fill the details. Also, they meet annually with us to understand our practices and we have to give a full-fledged presentation to them. That is the level of interest and concern which the institutional investors are having while investing in the corporates. Also, the banks are looking for responsible lending. They're looking for companies who are ESG compliant, and for those companies, the cost of loan or funding is less as compared to those companies where there are governance issues or where there are other issues involved pertaining to ESG. Coming to investor expectations, as I mentioned, the institutional investors are expecting better disclosures, transparency in these areas. Regulatory compliance, of course, it is growing around the world. European Union has been pushing for this. Even SEBI has been very active and bringing amendments and updations year on year. And the companies are under pressure to comply with the regulations or they may face penalties as well. And there are different frameworks laid down by different organizations for making the disclosures. Of course, there is no standardized or benchmark for taking particular framework for disclosure, but yeah, there are different kinds of frameworks available which you can choose as per your convenience and your relevance. Fourthly is the risk mitigation. ESG also can be integrated with your risk management practices. We'll discuss more on that as we move ahead. But yes, we can identify the risks and we can make our mitigation plan to combat those risks, which may help to reduce our cash flows also. Reputation, brand value, of course, if you are ESG compliant companies, the governance is strong, you have social image, it helps to build the brand image and the reputation of the company. Talent is flowing all across and people are looking for organizations which are more compliant, which look after the employees, they have better healthcare benefits and better workplace environment where people want to work. And you would agree with me that nowadays the youngsters are looking for organizations which has better workplace culture than taking better money. They want mental peace more rather than more money. So these are a few reasons why ESG matters for a company altogether. But do you think everything in ESG has to be reported? That's a question. So ESG doesn't mean that we need to report everything. There comes into picture the materiality in ESG, which means we report those things which truly matters for the company as well as its stakeholders. So the definition of materiality is that only. It is a process of identifying those ESG issues which significantly impact the business as well as all the stakeholders. So what you can do is you can identify those material issues of ESG and then you can make your action plan to work on it. So earlier, business was more of profit. So it was like business needs profit to survive. But now, to succeed in a business, it is people, planet, and profit taken all together. So the companies have to maintain a harmonious balance between people, planet, and profit. It is called three P's. So from that aspect, materiality is important for the company, which identifies those issues which has impact on business, its cash flows, and financial performance, also on the stakeholders, which can be your investors, your customers, your employees, or the community at large. Now, what is the purpose of ESG maturity assessment? So, as I told, there are multiple topics under E, S, and G, all the three pillars. So, we need to first prioritize what are those issues under each of the pillars which is more relevant and impacting to the business and the stakeholders. Once we identify those topics, we can allocate our resources and time effectively to make a sustainable value and mitigate the risk. And then we can build our ESG strategies, we can set our KPIs and targets aligning with the business goal. Also, once we have done this assessment of materiality, it also helps in reporting because different frameworks focus on different kind of impact of the ESG issues. So it also helps us in reporting of the various issues in a more transparent and more detailed and relevant manner, which helps us to build the stakeholders' trust and confidence also, because they feel we are more serious and we are doing in letter and spirit. We understand our responsibility and accountability. And of course, once we identify our risks and opportunity, we can align it with our strategy as well. Coming Coming to the benefits of doing this assessment for the organization. Of course, if there is no benefit, you won't like to get into a process which is a elongated one and which involves cost as well. So yes, there are many benefits for the organization because you can have a better decision making because you know what issues matters to you. You can reduce your risk exposure to those issues to avoid any legal liabilities or operational disruptions. You can gain the investor confidence. Competitive advantage, as I mentioned, your peers are working very hard to get on top and be a leader in ESG compliances. So if you're not taking action at this point of time, later you will be lacking behind. And you can't do everything in a day. It's a progressive thing. ESG initiatives and practices is an ongoing process. It's not that in one day you can do everything and finish it off or in a 1 year. So of course, you have to start and take one step ahead each year, and then you can go to a leadership position under the ESG ladder. Also, we can have a sustainability roadmap, which is a long-term vision. As I always say that sustainability is a long-term goal. Your profit can be of short-term or a definite time period, but sustainability is never for short-term. It is only always for long-term goal. And as I mentioned, when we identify the ESG issues, it is not necessary that it will only be a risk for the company. It can also be an opportunity for the company, which if the company understands at an early stage of time, you can grab the opportunity. So there have been cases in the BRSR reporting also, there is a requirement to disclose whether the ESG issues are a risk or opportunity for the company and how you are making use of the opportunity or how you are combating the risk. So it is very important that the company undergoes the materiality assessment to understand their risk and opportunities as well to encash it at the right time. There are different types of materiality in ESG. One is the financial materiality, which means those issues which have financial impact on the company, that is a financial materiality. For example, your regulatory penalties. It has an impact on the financials. Carbon tax liability. More emissions you have liability on that. Legal cost of governance failure or legal cost of non-compliance of environmental laws. Again, reputational damage because of labor disputes. So all these things will have an impact on the financial performance of the company. So those kind of issues are called financial material issues. Second is an impact materiality, which means what impact the company is creating on the society, people, and the environment. So whatever business or operations a company does, it will have some kind of impact on the society or the environment. So in the impact materiality, that analysis is done. What is the impact on the environment and society? For example, to help you understand more on this, for example, the community displacement. In case you are in a real estate business, you're constructing a company in a place where there are already people who are residing there. So in case you are displacing those people, your duty is to again rehabilitate them. Again, in manufacturing company, waste generation. So you're impacting the environment because of your waste. So these kind of water usage is also there in your manufacturing company. So your operations are having some impact on the people or the environment. That is one analysis to be done. Nowadays, one more trending thing is double materiality, in which it's a combination of the financial materiality and the impact materiality both. So when a company goes for double materiality, they analyze and assess what is the company's impact on the environment and people, and what is the impact of environment and people on the company. It's two ways. So you get a holistic picture of how this is functioning, and accordingly you can take your calls. Now, why double materiality is becoming a trend nowadays? One is the regulatory pressure. The EU's regulations are mandating reporting of double materiality. Stakeholder expectations, as I mentioned, it is growing now, and they're expecting that you show what's your impact on the environment, people, and how this is impacting your company, and also the broader understanding of risk and its management of the integration of ERM and ESG. So since we have understood that what is materiality assessment, what is different types of materiality. So now let's understand what is the process of doing the entire thing, so that we can have a fair idea of what we are heading towards. So firstly, when you go for materiality assessment process, it's a 6-step process. First, you define the objective of doing it. Whether you're doing for regulatory reporting, only reporting purpose, or you want to align with the business strategy of yours. So that is something you need to identify. On the basis of that, you decide the ESG topics. So we'll be discussing these things one by one. I'll just finish this thing. So we identify the topics, we engage with the stakeholders, we assess the impact of the entire exercise, we prioritize our topics where we need to take action, and then we validate and integrate. We'll be deep diving in the entire process of materiality assessment so that we have more clarity on how it works. So this process is actually being followed by many corporates. They have been doing, and they have been publishing in their annual report also of the result of the same. So first is defining the objective. So as I said, you have to first understand the regulatory compliance, reporting requirement, or a strategic development or risk management. Once your purpose is clear, then you can go to the next step. That is the scope of assessment. You can do it for a specific business operations. You can do it for a specific geographic location. Also, the companies publish their report on standalone basis, or consolidated basis along with their subsidiary companies also. So you have to be very clear on your boundaries of the assessment, because it's an ocean of things and you can't go without any plans. Also, we have to have a time frame for that. Are you looking for a short-term assessment or long-term assessment? For example, I am thinking of a period of 2 years time frame. So I will have that kind of mindset and I will ask my questions in that perspective. That in next 2 years, what is important for my stakeholders or my company? Then alignment with my strategy. So of course, in a business, there will be situations where the company keeps on changing the strategy. So in that case, for example, in the broking industry, if I say earlier the broking was very much into picture. Now, since times have changed, all the broking firms are moving towards wealth management. So strategy is changing. So when the strategy changes, the material issues also changes along with that. So that's why people go for materiality assessment every 2 years or 3 years so that it is in line with your strategy and your priorities. The next step is to identify how to get those topics, ESG topics. Now, you know that the pillars are environment, social, and governance. But what topics has to be covered? Or what kind of questions has to be covered? How will you come to know about that? Suppose in social, if you take employees, then diversity inclusion is there, equal opportunity is there, remuneration is some topic in that. So there are multiple topics in health and safety is there. So what you have to take, how will you come to know that? So to understand that, you can take the basis of some industry standards like GRI, SESB, all of them have their frameworks, which shows what questions are relevant in those frameworks. And you can align your ESG topics with those frameworks, because ultimately, when you have done your assessment, you will be reporting under those frameworks only. So if you know which framework we are using for reporting, same framework you can use as a base to start on the ESG topics you will be pondering on. Also, you can look at your competitors and benchmark your ESG topics, because similar kind of sectors will have similar issues. Obviously, manufacturing companies will have a different ESG issues. For manufacturing companies, it is more on the environment issues, emissions. For a financial sector, most important is data privacy. It is your consumer experience, right? So depending on the sector of the company, the ESG issues will differ. So you always have to take those companies for comparison. You are in the same sector of business and preferably of the same size and scale also. A smaller business will have different issues. A large scale business will have a different issue. So those things have to be considered before picking the competitors with whom you are doing the benchmarking. Regulatory requirement, of course, is the top priority. You do the entire task and then you realize it's not fitting the regulatory requirement, will not solve your purpose. So that has to be kept in mind always with the local laws also. Internal expertise is also required, because you can hire people from outside to conduct the exercise of materiality assessment. But those people will not know the inside out of your company. So you need people inside your company, preferably from my experience, I would say a CFO, a company secretary, basically the KMPs who have an overview of the entire working of the company. By entire working, I mean who has connect with all the departments, cross-functional departments. So because CFO has a better understanding of what is happening in the financial part, also they have understanding of the business, of the customers, so they can give good inputs from that aspect. Company secretaries also, because they have the annual report, they deal with the people, so they have idea of the other things like social, the social employee part, the CSR part, environment part, they can take care of. So it's a combination of 2 3 people. It can be a CRO also, it can be HR head also, but yeah, those people who have understanding of the overall working of the various departments and functions of the organization should be involved in this process, because they will know what are the issues in various departments and they can give good inputs. Also, we can take the input of the stakeholders. This is stakeholder engagement is an important part. We'll take it up in detail as we move ahead. So as I said, once you have finalized the framework which you want to report under, you have checked your peer companies, you have consulted your internal team members who have expertise, and you have also communicated with the stakeholders, you get your list of ESG topics. So as I mentioned, different sectors will have different issues ranking into high, medium, or low. Now, this is an important part. When I talk about the stakeholder engagement, who are the stakeholders of a company? Again, in this case also, your CFOs or the CAS or the CRO who have ideas of this, or the compliance officers, all has to be involved. It's not a one-man job, frankly speaking. It's a collaborative job for all the department heads to give who are the stakeholders. So internal stakeholders are mainly the board of directors. If you have committees, the committee, employees, senior management. External stakeholders are your investors, your regulators, your customers, your suppliers, the communities, the bankers, the credit rating agencies. So again, depending on the business of the company, the stakeholders will differ. So it's very important that you collaborate with all the functional heads and take the inputs that who are the stakeholders they are dealing with. So you get a fair idea that you are having the stakeholders in your platter. And then you have to take the inputs of all the stakeholders to understand what are the issues important for them. So basically, when I say stakeholder engagement and materiality or reporting, it is not about guessing that one issue is important for someone. No, it's about listening to someone. What is important for you? So unless you go and interact with your stakeholders, you will not come to know. And if there are any gaps in your assumption and their perspective, you can fill those gaps with the materiality assessment process. These are different ways in which you can engage with your stakeholders. One is the surveys. So we can have a questionnaire which we can send to all the stakeholders and they can give their feedback in that. Sometimes we can have one-to-one interviews also with the big institutional investors or big investors, the banks. We can discuss with them what are the issues you think is relevant for you. We can have workshops on the ESG topics. As I mentioned, the internal stakeholders are equally important. So in my company also, we have periodic meetings with the stakeholders to understand what is happening in their area, what is new development, what are the things which are important for them, so that we can have a good brainstorming session on the ESG thing. Because when the ESG was newly introduced, people were not aware of it, what we are asking the data for. So we have been conducting many sessions to first make them aware of things, then they can give their proper input. There are focus groups for these discussions. There are materiality surveys done. As I said, we can hire people also for that. Various big four firms, even the small firms are rendering these services for conducting the materiality assessment. And obviously, industry forums are there where you can go and speak. NSE also organizes sessions for discussing on ESG. There are many other agencies who have, especially in the year-end period, there are many seminars and conferences being done for ESG awareness and practices which the companies are following. And it is actually beneficial to attend those kind of seminars because you get to know what is the trending thing in this area. So once you have identified your issues with all these measures by interaction with the stakeholders, by looking at the framework, the topics, you have got few topics now. Suppose you are a financial service firm, you've got few topics. Now you want to understand how much impactful these issues are for your company or the stakeholders. So again, there is a formula for that. So you can see what is the impact magnitude of that issue. As I said, the ESG issue can be a risk also, it can be an opportunity also. So the impact can be either positive or it can be negative. So we have to first analyze that. And whatever the impact is, how severe it is, what is the scale of impact, that we need to identify. After we identify that, again, we go for likelihood of happening of those events. So if you have handled ERM work sometime, enterprise risk management, in that also this concept is followed, the impact and the likelihood. So once you understand how likely this thing, how probability is high or low, then you can find its actual impact on the company. Again, the CFOs of the company will be very much concerned on what is the financial relevance of this entire thing. So of course, it is important to understand the financial relevance also because it's a cost to the company. If you're addressing some ESG issue or you are trying to encash any opportunity, there's some cost involved too. It can be operational cost. So you have to identify the financial relevance also. It's very important. No business will run for no profit unless it's an NGO. So it is important. And along with that, as I mentioned in the beginning, it is people, planet, and profit. So along with the profit, you also have to see that whether these topics are important or urgent for your stakeholders who are concerned with your company. So it's again a two-way thing. And then the regulatory exposure for this kind of risk or opportunity, whatever it is. So if it is a risk, how big is the risk? What is the regulatory exposure to it? Can a company be penalized heavily if not address this kind of risk? Then it's better to address those ESG risks rather than getting a wide exposure to regulatory penalties. This is a matrix which I have made for you to have a better understanding on how you will go ahead with the entire exercise. So once you have analyzed this thing, it is a bit technical, I understand, but I think it's easy for you to understand. So if you see in the first quadrant, the topics which are important to the business and also important to the stakeholders. So in that case, no, the first quadrant is important to the business, but less important to the stakeholders. So in that case, you have to manage those risks closely. The focus should be internal efficiency. If you see the right side, the second quadrant, which is the highest priority and critical, because those topics are important to the business as well as the stakeholders. So in that case, you have to build an ESG strategy to address those kind of risk because they are critical. Coming to third quadrant, which is monitor, in that case, it is low importance to business and low importance to stakeholder. Then you can just keep an eye on it to see the emerging trends. And lastly, if there are issues which is less important to the business but more important to the stakeholders, you can keep the stakeholders informed about the same. So depending upon the assessment and the result of the assessment, you will have the action plan to mitigate those kind of risk or opportunities. So this is actually a very practical thing which is being done by the company to allocate their resources at the exact place which is required. Because not all battles have to be fought. We need to choose our battles, which are more and truly relevant to us. This slide shows, this is IndusInd Bank Materiality Assessment chart. So it is available in the annual report also. I have fetched from there only. So if you see here, it's a live thing which I have presented here. So if you see point number 11, it's in the governance column. It's compliance. So for IndusInd Bank, it's a banking sector. Compliance is towards the higher side for both the stakeholders and the business. Impact is high for both. Again, if you see point number 5, it is customer experience. So it's a banking sector. Customer experience is of high priority for them. Point number 14, ethics and integrity. So of course, in a banking sector, governance, ethics, integrity is of high importance. So it is at the higher side. If you see point number 4 on the left side, carbon footprint. So because the banking sector carbon footprint is not that much high compared to manufacturing companies, so it is at the lower side of the chart. One more example, if you want to see point number 13, it's a financial performance, or we can take 12, transparency and disclosure. It is at the medium level for them. So they also have done the materiality assessment, and as per the feedback received from their stakeholders, they have got this report. So various companies does the assessment and get the report in this way, and then they start working towards the high category of ESG risk first. Then they might obviously they will keep on working towards the lower risk points, but priorities on focus is on the high risk points. Now, so we do all these things, but there are a few validation and governance things which comes into picture when we execute all this process. Firstly, as I said, senior leadership review. So it's not a one-man job. All the CXOs or the functional heads have to be involved in the entire process to have a holistic view of what is happening in the ESG. So whoever is managing ESG in their organization would obviously agree with me that you need inputs from all the people. Coming to board oversight, of course, there are many companies who have formed independent ESG committees for oversight and guidance on the ESG initiatives and practices, because the board is also accountable for the ESG disclosures and ESG practices. And when you have an independent ESG committee, it gives more confidence and accountability to the board and the directors also. Cross-functional workshops, as I said, it's very good to have periodic cross-functional sessions, collaborate with all the teams, get their feedback, and you can have a better clarity in the entire process. External assurance is again getting a trend and getting more demand. Firstly, because of regulatory requirement, few companies have to do as per the LODR requirement. But it is observed that many companies who are not mandatorily required to do the assessment, they are doing it to get the data credibility and accuracy checked from external auditors, and the assurance reports are published in the annual. So it's a very good step which companies are taking it, which shows that companies want to do in letter and spirit and not do a checkbox tick mark job. So once we have identified our ESG topics, which is relevant to my business and my stakeholders, now what next? Is it okay that we understand and we just sit over it? The next 2 years, again, we do the assessment, no action taken. So without any action taken, post identification of the issues is of no use at all. The objective of doing the assessment is to take action on it, whether it's risk or opportunity. So when we have done the assessment and we have got the issues, then we start defining the KPIs, the key performance indicators, and the targets basically. So if you see the BRSR report of various companies, they mention their targets and the status of the achievement of the targets. So very beautifully they give their targets and they have been achieving it also. So once you set your targets, then you start working towards it. And many companies disclose their targets, their achievement status. So these things help to gain more points with respect to credit rating. Sorry, not the credit rating, ESG rating. So ESG rating agencies, the CRISIL is there, MSCI are there. So they actually see this kind of additional disclosure the company do, and they give extra rating to those companies. As I said, after you have set the targets, it's an important thing which people are doing. They are integrating the ESG risk with the ERM model of theirs. And finally, after doing the entire thing, of course, you want to disclose in your reporting what efforts you have taken for enhancement, for integration, your targets, and you do a reporting as per the chosen framework or standards. And where you gain the brownie points from the agencies and also from the stakeholders. These are few examples of how the KPIs are defined. For example, one of your issues is greenhouse gas emissions. So your KPI can be reduced greenhouse gas emissions by 20%. It's a KPI. It's an example of KPI. Again, in case of your financial sector, BFSI companies, you can have a KPI to improve employee diversity by some percentage. So that's a KPI. Again, if you are in a manufacturing company, you can have to KPI to minimize the waste from operations. So you can have a percentage attached to it. So these are the few examples where you can set your goals and KPIs. And depending on that, you will act. So these are few companies who have set their targets. These are actual examples. So if you see Mahindra and Mahindra, they have set a target to achieve net zero by 2040. So across operations and supply chain, they have gone for carbon neutrality. They are expanding their EV. So their major push is into electric vehicles and clean mobility. Also, they are promoting sustainable farming by regenerative agriculture and water efficient practices. These are the targets set by Mahindra. If you see PepsiCo India, they also have target of sustainable packaging, which is 100% recyclable or compostable. Also, they are trying to include supply chain, which is again a big topic to be discussed. So they are trying to integrate the ESG across value chain partners. Coming to Infosys, they are already carbon neutral, which they have achieved ahead of their schedule. They are also trying for digital inclusion by empowering the communities through digital skilling programs. So these are the actual examples which companies are doing. Tata Steel is also going for green steel transition, wherein their major investments are in low carbon steel production. They are also promoting circular economy, where they are reusing the water and scrap recovery targets have been set. Vedanta is going for carbon intensity. They are reducing the matrix and they are embedding in the business KPIs. Larsen and Turbo, it's a green campus initiative where all permanent campuses are certified as zero waste to landfill. So you can see there are a number of examples like this. I have quoted only few of them for you to have an idea of how the companies are setting the targets. Very good companies are setting their targets and they're achieving. It's very good to read those annual reports also. Now, why this ESG matter, this materiality assessment and all these things matters? So first is it builds the trust amongst the stakeholders. It helps in data accuracy. So when we engage with the stakeholders, we get the inputs. So our data accuracy is increased. Also, as I mentioned, if there are some things which we have looked upon, we have overlooked, whether it can be a risk or opportunity, when you interact with your stakeholders, whether internal or external, then you can identify those blind spots and act upon it. And of course, it helps in improving sustainability. So stakeholder engagement is one of the most important thing in the entire materiality assessment process. Here I have got some sample questions on how the questions are framed and circulated to the stakeholders for their feedback. For example, in governance and risk, you can ask a question whether, in your opinion, how important is corporate governance structure and ethics? Risk management, you can ask how important is to prioritize effective risk management practices. Data privacy, how important do you think it is to ensure the privacy and security of customer data? Innovation, how important is it to prioritize innovation and digitization in operations? Environment perspective, you can ask how important do you think it is to reduce greenhouse gas emissions? From energy, how important is improving energy efficiency and reducing total consumption? With respect to social and human capital, you can ask, is in your opinion, how significant is human capital development and skilling? For well-being, you can ask, in your opinion, how significant is employee well-being and engagement? You can ask about D&I also, how important is to promote diversity and inclusion in the workforce. Equality, you can talk about. So when you float these kind of questions, one way is that you can ask them to give a rating in the scale of 1 to 5 or 1 to 7 on how likely or how they agree, how important it is. So these kind of questions are floated on the stakeholders, and depending on the ratings given in the scale of 1 to 5 or 1 to 10, whatever you have quoted, the entire matrix which I had discussed earlier of impact on business and impact on stakeholder is derived. Now, these are the various standards of framework which are being used and which are existing. There may be other more, but I'm focusing on this right now. So if you see, all standards are focused on different kind of materiality. If you see GRI standards, the Global Reporting Initiative, which many companies are reporting in the annual report, it focuses more on impact materiality, which means what is the impact of the company's operations on the society and the environment. So the questions in that, the reporting requirements are more focused around impact materiality. If I talk about ISSB, it focuses more on financial materiality, on the impact of the ESG factors on the financials of the company. SASB is more industry-specific metrics. So depending on the specific sector of the business, they have standards to define the requirements. The CSRD is focusing on double materiality. So you have to report both financial materiality and the impact materiality. The TCFD, as the name suggests, it is Task Force on Climate-Related Financial Disclosures. So it is focused more on the climate-related financial risks and opportunities for the organization. And the UN SDGs, which is the base of everything currently which we are doing in the BRSR report and SEBI is coming up with. They are the 17 goals which are often used to align our corporate impact strategies with the global needs of the entire world. So you can see the standards which you choose for reporting depending on your sector of business or your perspective or your purpose of the assessment will determine which standards you want to use and which kind of impact materiality you want to focus on and get the outcome for. So you have to start from the base thing and then go step by step ahead to get the final result which is relevant to your company. These are few case studies which I have put of different sectors of company to give a practical view of how it works. So as I said, the ESG issues can be a risk or an opportunity. This is Infosys chart. So if you see for Infosys, the environment climate change is a risk for them. Why they say so? The rationale is the climate change risk manifest as strategic, physical, and transitional risk, which can affect their operations and profitability and reputation. And how they are mitigating this risk is through comprehensive risk management strategies implemented across their operations. They've also given the financial impact of that, which is negative because increased operating cost to meet the environmental standards and evolving regulatory requirements. So, of course, any initiative which you take to combat the ESG risk has some cost. So, you have to analyze whether the cost is short term, long term, how it can benefit you in the long term. There are many costs which incurred in short term is giving better benefit and profitability in the long term. Governance is an opportunity for them. That's what they say. Why? Because it helps in increasing their revenue from cybersecurity service offerings and solutions. Also, higher client confidence in their ability to serve service. So for them, so basically cybersecurity is a part of governance, and they are saying it's an opportunity for them because they are rolling out the solutions for it. And as per them, it's a positive financial implication for them because it minimizes the cybersecurity and data privacy breach threat to Infosys, their own company, also their customers through advanced cybersecurity solutions and adoption of leading data privacy standard. So since it is an opportunity for them, they might want to include more cost in this area to gain more positive financial implication. Coming to societal employee experience, for Infosys, it's a risk. It's what they say because failure to provide a best-in-class experience may severely impact talent attraction, employee engagement, and retention rates. So it's a service sector against not a manufacturing company. So for them, employee engagement, retention rate, talent attraction is very important. And how they combat that risk is that they have implemented employee engagement initiatives, holistic retention measures are there, extensive career and leadership development programs they have been conducting to manage and retain their employees. So for them, it's a negative impact on the financials because they have potential impact on employer reputation and increased cost of talent acquisition and replacement. So depending on the business of Infosys, they feel that these factors are risk and opportunities for them. This is Tata Steel slide. So if you see here, they will have different issues identified as risk and opportunity. The GHG emissions and climate strategy is a risk for them because high emissions from blast furnace process. So they are trying to achieve net zero by 2045, which will require transition to low emission steel making. To combat this risk, they are onboarding decarbonization strategies and it has a negative financial impact on their financials. The circular economy strategy is an opportunity for them because the steel is recyclable, scrap use lowers carbon footprint, and waste recycling adds more revenue to them. So it's a positive financial implication for them. Coming to health and safety of the employees, it's a risk for them. That is what they say, because safety incidents harm workforce and reputation, and regulatory risks are also there. And how they're managing this risk, they have comprehensive safety management system, zero harm goal, and governance structure is very strong. But yes, if something goes wrong, they have a negative financial implication. Coming to the social supply chain sustainability, it's a risk for them because integrated value chain impacts environment, emissions from logistics. And they are managing this risk by responsible supply chain policy, EV deployment, green mobility fleet, and this is having a positive financial implication for them, maybe in the long term. Coming to social, community, and CSR, it's both risk and opportunity for them because maintaining social license, community engagement builds goodwill. So it's a risk and opportunity for them both, and they are working towards the education, health, livelihood, infrastructure projects, sports project also, and it's a positive financial implication for them. Looking for a BFSI company, it's a Angel One Limited again. Here the sector is different, so their issues will be different. And if you see, they have quoted all these issues as risk and opportunities both for them. So it can happen that some issues are both risk and opportunity for the company. It all depends, very subjective to justify, but yeah, it's a different perspective of different people. So a lot of discussion and analysis are required for coming into a conclusion. So if you see the environment, climate and decarbonization, it is risk and opportunity both for Angel One. The rationale is integration of climate considerations via energy efficiency, resource optimization and waste management. So what approach they are adopting is they are tracking the scope 1, 2 and 3 emissions. They are doing third-party energy audits. They have the ESG committee oversight. And they believe it's a positive implication leading to cost saving, reputation, and investor confidence. Strategic digitization, again, this is a risk and opportunity. It's a key enabler of growth, enhancing operational efficiency, service delivery, and CX. So they have DG Locker for KYC, it's a digitization measure which they have taken. They have AI automation, so almost 42% auto closure of support emails. They have risk frameworks, so they are using digitization for this kind of purpose, and they have seen positive impact on the financials by reduced cost, market share growth, and streamlined operations. So that's what I mean to say, that when you identify your material issues, then you understand when you are taking action for mitigating the risk or availing the opportunity, you can see whether the impact is negative or positive. So it helps in your strategic decisions also of the organization. Coming to the corporate governance framework, it's a risk opportunity both because strong frameworks ensure compliance and uphold ethical standards. So they have their own anti-corruption measures, insider trading prevention codes, they have regular employee training. Again, it has a positive impact. So I believe Angel One is very positive and they have quoted all positive implications in the financial implication. So they look in a very positive way of all kind of thing, and they are taking good action towards it. So there are many other companies who have been publishing these kind of mortality issues and their actions taken in their reports. So it's a long discussion which can be done, but I not go into much. I have quoted 3 types of industry sectors of different companies. So how different companies have different issues and how they perceive it is also very different. The trend in mortality assessment, so as I say, now people are AI, they are using AI for everything. So of course, AI will be used for leveraging the assessment process also and analyze the stakeholder sentiment. Now, dynamic assessment, I mean, earlier people used to do once in a year, 4 times in a year, once in 4 years, but now people are monitoring it and they are doing it normally 2 to 3 years gap, so that it is aligned with the strategy and the changing dynamics of the company and the sector in which they are working. ERM integration, as I said, of course, we need to embed in the ERM so that we get a complete picture of where do we stand. And transparency, of course, we have been discussing since last 1 hour that transparency is what people and investors are expecting from us. So always good to identify the right framework and standards which suits you the best, and then make your disclosures more elaborative and more interesting for anyone to read. These are the common challenges while doing this assessment. And these are actually the challenges. One is the data availability. So as I said, there is no standard framework as of now that everyone has to follow this particular thing. So different companies publish the data in different standards, in different frameworks. Also, it is difficult to get data from the supply chain partners. Internally also it's difficult to get data from people. Still now people are coming out with tools for collecting data within the organization. So data availability and consistency is an issue while assessing the material issues. Which slowly we might find out ways to fight this challenge. Stakeholder fatigue is second thing. If you keep on doing many surveys or frequently if you do, the stakeholder will get bored and they'll not respond in an active manner. So we have to understand the mood of the stakeholder, the mode which they would like to respond in, and then we should approach the stakeholders so that they can respond in a productive way and we can get a quality of data which can be helpful for us. Second is balancing the priorities. Of course, as I said, profits are important, financial implications are important. We can't just do blindly anything and we say it's ESG we are doing. No. So there are immediate financial goals for the company, but ESG is again a long-term concept. So we have to balance both the three P's, people, planet, profit, harmonize all three, and then we can have a sustainably developed company. Conflicting expectations is another very important concept which I would like to highlight. Now, different stakeholders will have different requirements. Their expectations are different from the company. For example, the investors' main priority may be to get the share price increase, the financials, the profits. They want the good return, they want good dividend. Banks, the stakeholders at bank, they would require again good governance so that they can rely on the company. For them, governance can be important. The regulators, again, for them, the governance can be important. The regulatory compliance can be important. The consumers, for them, data privacy is important. They are sharing the data with you. So for different stakeholders, for employees are more concerned with their remuneration, with their human rights, with equal opportunity, with their health and safety. So you can see every kind of stakeholder can have their own expectations and the issues which are material for each stakeholder will be different. And none of them are wrong in that. All are right on their part. So there are conflicting expectations, and it is important that we reconcile all these diverse expectations and requirement and come to one conclusion where we can address the issues of all the stakeholders, but we give priority to those things as per our matrix which we have discussed on the impact on the business and the stakeholders together. And normally people focus more on the high priority issues. So to summarize on this part, I think I have talked much on the materiality, types of materiality, the assessment process. After doing the assessment, what we have to do, we have to set the targets and we have to see the impact of it. And then finally, we go for reporting of the all efforts we have taken in the entire year and we get good rating that we strive for from the rating agencies also. So I would like to conclude my presentation here. You have questions, you can throw on me. I'll be happy to answer. I'll try to answer. If something can't be answered now, you can drop me an email separately as well. Manisha, over to you.
Thank you, ma'am. Thank you for your insightful and engaging session. We truly appreciate the valuable perspective that you've shared with us today. Now, we will move on to the question answer session. Okay, so let me check. So the first question is, in the absence of ICAI guidance note on ESG assurance, which framework are most Indian firms currently following for determining ESG materiality?
So ESG materiality, there is no framework as such. Okay, it is just that if you engage a firm also, they'll ask for your stakeholders, they'll throw questions on them pertaining to ESG, and depending on the feedback from all the stakeholders, they'll give you a matrix. So there's no framework as such for that. Framework is for reporting.
Okay.
Yeah, it can be integrated reporting, which includes all the 6 capitals. If you see, many companies do integrated reporting, so which includes your human capital, your physical capital, financial capital, the social capital. There are different 6 capitals are there. So that is the integrated reporting. Also, if you see the ESG reporting of few companies, they also give the GRI principles which they are following.
Okay.
Or they are complying with, to give a better perspective on their compliance status. For material assessment, there is no framework as such.
Okay. Okay, got it. The next question is, how should a CA conduct the materiality workshop with the client's sustainability team when most management participants have non-finance backgrounds?
Doesn't matter. As I said, I'm in a corporate. Okay. So I understand. And I'm a company secretary, not a financial background. Okay. I'm a law graduate and a CS. Okay. So you have to collaborate. See, CFO is important. Any person who has the financial knowledge is important, because in ESG, the consumer's part, most importantly, the business part, that CFO has a better knowledge. That's what I feel, because they know what is happening in the financial numbers. So you have to include them. Then the company secretary or any person, I feel the company secretary is a good person to deal with it, because you have access to so much of information. You can deal with that because you make the annual reports. So the person who makes the annual report has to connect with all the stakeholders. It can be admin, it can be HR, technology, operations, compliance. All data comes into the annual report. So that 2 persons are very important to be included. Other people, so you collaborate with all the functional heads, because when you go for the BSR reporting also, all the 9 principles, there are different functions of that. Some are pertaining to legal, some compliance, some HR. Connect with those people, explain your requirement, understand their requirement, and then take it ahead. It's a collaborative thing. You cannot do it alone. You will not know what admin is doing in the environment. For example, I initiated the environment certification with my admin team, but they were the people who actually worked on it. So you have to initiate, someone has to initiate. So an ESG expert you need. Again, in a big company, it's important you need an ESG expert, do some certification, and then you can pull people, relevant people, and get the things done. One man job, it's not done. Cannot be done.
The next question. Many companies are still identifying 50-60 ESG topics as material. Is there a practical upper limit that you recommend, and how do you push back when the list is too long?
That's what I'm saying. If you have 50 list of material issues, which one you'll address first? So again, when you have 50 list of issues, you can have, if people are so micromanaging, they are so vigilant, it's very good thing. But again, obviously you will have top 10, 20, which are of major impact on your business, like data privacy and security for a banking company. It's a very important thing. So obviously you'll address that issue first. You will not go and address an issue of carbon emission first for a banking company. But if I'm talking about a manufacturing company, obviously you will address the GHG emission first, no? So there will be a hierarchy of all issues. It cannot be all issues as material to me. Materiality grade is there. So if you see any reports, they'll mention high, medium.
Based on the sector and then prioritize.
Based on the sector and the location. Suppose you are in a place, you have an oil refinery, you are in a place where there are more people. So what is important for you? You're in a place which is forest based. You're cutting trees. What is important for you? That's why in the reporting they ask, where is your location of the company? Semi-rural, rural, they ask. Then every questions which is mentioned in the BRSR reporting of SEBI has a logic behind it. They want to understand where you are working, where is the location, what you are doing. It's a thoughtful format given by SEBI. So it cannot be 50, will be at same level for all companies. Not possible only.
Now the next question, for impact materiality, companies are using stakeholder survey with low response rates, say 5 to 10%. Does this affect the reliability of the materiality outcome from an assurance provider's perspective?
Of course. So you have to push people to get the response. If you have, suppose banks, you have, all companies have banks. If you have, suppose 11 banks on M-panel with you, at least get 5 banks to respond. Investors. So small investors you can't go, but you can approach the institutional investors, big investors. All big investors are connected with the companies. There will be someone, investor relations team or someone who will be dealing with your institutional investors or big investors. Ask them, they will respond. They are interested in responding. If you want to do it, you will get it. You have to push. See, ESG is, as I said, it's a transformation. You have to create awareness. Tell them we are interested to address your issues. They will come up. And they have issues. Who doesn't have issue?
Yeah.
It's a human nature.
Yeah, absolutely.
Push is required, whether internal or external. Frankly speaking, internally also you have to push a lot. When I say collaborating with the internal stakeholders, not easy task. When I started with ESG 3 years back, to make them understand what is ESG, why you need this data, that was a big task for us. It was a draining session for me actually to make them understand why I need this. So efforts are required, and those people who do initially will get the fruit later on.
Okay. The next one. Have you come across instances where a topic was not material from a financial materiality lens, but highly material from an impact materiality lens? For example, say community relations for a mining company. So, how did you handle assurance scoping in such cases?
I didn't get the last part. Which risk you talk about? A mining
So,
company?
this example is given, but the question
Yeah.
is that
What
if
was the
you
example?
have come across some instance where a topic was not material from a financial materiality lens, but it is a highly material from an impact materiality lens.
Okay. It's a good question which I would like to address. See, for a banking company or a BFSI company, broking company, wealth management company, impact on environment is not as much as for manufacturing companies. Agreed. Okay. But now it is being seen that people are putting the environmental factors in their high materiality issues. So in near future, if you ask me, GHG emission is not material for me that much near future because I'm in a BFSI company. But still, if you see, they will put some environmental issues in their high category. So immediate impact on the company is not there of financial impact. But later on, when this ESG issue will become a big thing in next 10 years, and the way the climate change is happening, people will be impacted. For example, insider trading, when it started, it was not that important or that people are aware of. But now people are scared. There are SEBI inspections, there are NSE inspections on insider trading compliances. So it has gained popularity and the importance has been created. Similarly, ESG is just born now. We have been doing ESG somewhere or the other. But in next 10 years, it will gain importance. So if you see, most of the companies will put some environmental factor in the high material issues, though it doesn't have the impact on financials as of now. I'm talking about the BFSI companies. Hope I have answered your question clearly. You can check on the disclosures.
Yes.
Manufacturing companies will have, of course. I'm talking about the financial services.
Okay.
They do have.
Okay. The next question that is there is, How can technology and data analytics support the materiality assessment process?
Okay. One thing I've told, there are many tools available in the market now for collection of data, because the collection of data is a mammoth task. If you do over emails and all, you will get confused yourself only. So that is one thing which people are coming out and they are doing good business out of it, rolling out the tools. And AI integration to understand the stakeholders' expectations and sentiments. I have not used it much, but I'm sure there will be many products rolled out now and later also to use it to analyze the data. But yeah, tools are very much available in the market. Many companies are coming out with the tools. And in fact, I'll tell you, the more I interact with different kind of firms on ESG related matters, every 6 months they have some new product. One thing I'll tell, if you have come across ESG World. ESG World is a platform, it's a SaaS-based platform, which companies are putting on their website. So if you go to the ESG World, you don't have to read the entire BSR report one by one. You just put in your required data. So you want something about employees. Just write the keywords, they'll give you all details. It's so much easy to access for the stakeholders to get data in few seconds. You don't have to read the entire thing. Also, there are many softwares developed where in few seconds they can give a comparative picture of what your reporting is and your peers reporting are. You need to give them three, four companies name of your peer companies. They'll give you the software, the access to it. Immediately you can click and see what is your disclosure to one particular question and what they have mentioned. And you can enhance your disclosure in that. This ESG World platform is a very good thing which many companies have done. Even my company, I have only put it. I also have in my website, ESG World.
So that was actually the next question, that how should companies communicate materiality results in the sustainability reports? I think
sustainability report, you can add the materiality assessment process, the entire thing. People are doing that only. You give the entire matrix, give your high issues, give your description of what is the issue, and give your mitigation measures. You can see many annual reports, they are doing it. Because what happens in the BRSR reporting, if you see, SEBI format talks about only E and S. They say give your E and S, environment and social material issues. What about the governance factor then? So then what happens if you see the initial pages of the annual report, the companies give the entire ESG and they map it with the ESG, GRI guidelines, everything made. There is no end to it. You can do whatever you want. It's a huge area and of those who want to work, those who want to make money, those who want to do business. It's a huge opportunity for everyone.
so. That's where I think my next question comes from. In relation to role of chartered accountants. So how do you see the role of chartered accountants evolving in sustainability reporting and ESG related work?
Assurance is becoming voluntary. Good companies, assurance is becoming mandatory. Good companies are doing it voluntarily. So obviously, I have come across many CA firms who have hired people expertise in the BRSR audits, external assurances. They have expertise and they do it. That is one part I'm saying. In the big four firms or any other firms you see who conduct the materiality assessment, they also have CAs, CS. See, there is no specific qualification to do ESG compliances or audit. There's no requirement as such. Like for being a CFO, you have to be a CA. Right? For CS, you have to be a CS. For lawyer, to be a law. There is no mandatory certification for ESG. So anyone can grab the opportunity, just grab it. So all the firms who are giving different kind of services and products on ESG have CAs.
Right.
You should connect with those people, understand the area of growth and opportunity and grab. And we need CAs because the calculations, the audits, those CAs will be able to do in a much better because their mind is of auditing. No?
Okay.
It's a huge opportunity.
So what red flag should an auditor look for in a materiality matrix?
First, look at the backup documents. So when you go for the audit, obviously you will ask for the backup documents, evidences.
Yeah.
It's a task for them also to get the evidence. It's not an easy task of auditing the BSR report because half people don't understand what they want. So to explain them in red flags, if I say their task is to actually provide the certification of the accuracy of data. So you need to check the accuracy of data because the board is relying on that audit. So you cannot let go things. So when I have done the audit and some data was not available, see, these are not financial data. These are all non-financial data. So all companies will not have the data in place, frankly speaking. And especially when you start the first year of audit in any company, there will be many areas where data is not available. But it's fine. It's a transformation phase. So next year, when that company will do, you have to give your recommendations that please keep in place these things. Always I ask for the recommendation that what you recommend for better next year. Then that company will improve and it will be easier for the CA also to give the report because they also can't give us blank signed copy. So what the CAs do, they get a representation letter in writing from the ESG team or CS, CFO, who is handling that these data is not available and we have not checked those data. So the CA who is certifying is also safe. I'm talking from the professional's perspective, from your safety perspective.
Yes.
You should be safe in your certifications and take very clear writing what you have taken. Some assumptions are not standardized. Electricity consumption, yeah, water consumption is not maintained or monitored in many companies. Electricity, you can still have the number, actual number. Water, you might not have.
Right.
You should agree to a point with the management what calculation you are taking. Write it down, note it down, and then you take it. Later on should not come on you. That what calculation you have done.
Okay.
It is a serious task, of course. It's not that it's a non-financial reporting, it's light thing, no. It's an assurance which you are giving to someone. And protect yourself also.
Okay, so how do you suggest we balance concerns of different stakeholder groups? Should we give priority weightage to different stakeholder groups? And if so, then how should it be done?
So as I said, when you take the stakeholder feedback, you don't manipulate it. Feedback is feedback.
Correct.
You have got it. So after we get the feedback, we make the metrics and we take it to the ESG committee or the board. And the board will then again review it and decide. So they might do some ups and downs as per them because they are the people who are in the company. So they know better their strategies. So minor changes they can do. So then you decide the top 5, 10 issues. You are not doing favor, you can't do favorism to any stakeholder. Every stakeholder is important for us. Correct. So depending on their feedback, you get the result. The board will decide this is fine and will act upon it. There is no question of being partial to any stakeholder. If data privacy is important for a company, it is important. You can't deny it. I say, nahi, in my result, I have got GHG emission is high, so I'll take it high only. That can't be a case. In a company where there's an IT raid, okay, you can't say tax transparency is low category. It has to be high. You have undergone a raid, come on here. So it's a logic, subjective, nothing to be partial. It's everything clear and in numbers. That's the beauty of the materiality assessment because ESG topic is so subjective. If you don't put it into a paper, you'll not be able to understand that what issues are having what impact to you. As I showed you the slide of Tata Steel and Infosys, you can see how these items are risk. What is the implication financially? See, you get a clear picture of it. That is the requirement of assessment. Otherwise, it's all vague in air. Many issues a company has. Now, how will you identify? That's the beauty of it.
Okay, now I think one or two are left. So one question is, how many material topics should you explore through a survey? And how many stakeholders you should engage with? Is there any threshold or something? And then should the response of some stakeholders, say for example, investors, to be given more weightage, or
For number of stakeholders, again, so when you interact with your internal stakeholders, you will come to know with whom they are interacting outside. Regulators. Now, if you're interacting with 1 or 2%, that is not a stakeholder. Of course, regulator, you see, again, you know your business. Banking regulator is very important. You are a listed company, big company, you have institutional investors, very important. If you are in a retail sector, supply chain, very important.
Right.
Understood? So every business stakeholder will be different. So it's not about important or less important. If it's an NBFC company, again, your credit rating agencies, important. So stakeholders without which you cannot function are important. So basically all stakeholders are important. Otherwise, stakeholder होगा ही नहीं ना. Simple. That is one part.
Yeah, right.
Questions will always follow under ESMG. When you consult a firm, they guide you in this.
Okay.
To understand, depending on your business, they will identify the questions to be taken. For example, health and safety is an important thing for a manufacturing company. But if you talk about health and safety in a financial sector, there will be no accident as such in the working of the company, right? So depending on your business, again, the questions will follow. In the financial sector, diversity, inclusion, bring women. So those questions will come. So all these frameworks, when I say crystal, I'll give you one more input here. One more easy task, if you're going for rating, ESG rating, you want to get good ratings and all, how will you do that? How will you start that? Take a rating agency's framework with whom you want to go for rating. They have their questions. Do a gap assessment. You will come to know where do you fall. Where you're lacking, you can fill the gap, fill it. Then go for it. You'll obviously score better. If you just go for rating, you will collapse. Because every framework will have every rating agency will have a different framework. So that gap assessment also helps a lot to understand what kind of questions is relevant to you. But yeah, depending on the business, size, location, the questions vary.
Okay. So again,
Like in manufacturing companies, environment will have more deeper questions than just GHG emission. It will be waste management, recycling. But financial sector, what recycling you are doing in a large scale?
Yeah, right. So again, it's a subjective thing.
Are you getting my?
Yeah, so it's a subjective thing based on sector to sector, things differ.
But it will fall under ESNG, of course.
Okay.
Financial sector anti-corruption will be high.
Right. Okay.
It's very interesting if you start reading it. I hope I am clear to the audiences who are listening me. If you have any questions, you can again come back to me. Not a problem. You can drop me here. You can ask the next
You've
question.
answered almost all the questions, and beautifully you've explained everything. I'll just check once if there's anything left. Otherwise, we can move on.
Sure.
Okay, one last question is there. Is there any relation between sustainability initiatives and environmental framework in ESG?
Sustainability includes everything. Environment is a part of sustainability. Sustainability is a big word which encompasses all these things. People, planet, profit, everything comes together. Lastly, while closing this thing, I'll just say again, a business cannot be sustainable only with people and planet. Profit has to be there. So, a business needs to survive with profit, but to succeed, it requires people and planet also. That is sustainability, to sustain in the long term.
Thank you so much, ma'am, for answering all our questions patiently. Now I'll move on to the task of presenting a hearty vote of thanks to you. On behalf of Sustainability Reporting Standard Boards of ICAI, I extend my sincere gratitude to all the participants for joining today's insightful session on materiality assessment. Your active involvement and thoughtful engagement greatly contributed to the success of this program. A special note of appreciation to our distinguished speaker, Ms. Meghal Shah, for delivering an enlightening and comprehensive presentation on the significance, methodology, and practical nuances of materiality assessment. Your deep expertise and clarity in explaining stakeholder engagement, prioritization of ESG issues, and alignment with global sustainability framework offered immense value to our attendees. Your presentation enabled us to understand how a robust materiality assessment forms the foundation of credible sustainability reporting, informed decision making, and enhanced stakeholder trust. The session emphasized the importance of identifying key issues that matter most to an organization's long term impact and performance. We also extend our heartful thanks to all the participants for your enthusiasm, questions, and active participation throughout the session. Your engagement reinforces our collective commitment to strengthening sustainability practices and fostering a transparent and responsible corporate ecosystem. We look forward to welcoming you to our upcoming programs as we continue to explore emerging trends, regulatory developments, and best practices in sustainability reporting and assurance. Thank you once again for your valued presence and participation. Thank you so much, ma'am.
Thank you for giving me the opportunity to interact with all of you.
We had a great time.
Same here. Thank you.
Thank you.
Thanks, support.
Yeah.
Thanks. Yes, yes.